Hey guys, hope you and the families are doing well. In my own trading, I like to stay focused on the leading groups of the market and then try and identify those 1, 2, 3, potentially 4 leading stocks within that leading group. So this is what I'm going to do in this short video, share with you the common characteristics that I see from a technical perspective, those leading stocks in the leading groups display. So I really hope this is going to help you with your own trading. Market Surge are today's video sponsor. They are my go-to resource for analyzing company fundamentals. They are currently offering a limited time trial that you can see on your screen now. If you are interested in that, then please use the link in the comment section and the description below. So this video is going to be split into two main parts. We're going to start off with an overview and I'll explain the rationale of why I've picked these 6 charts which are all related to precious metal miners. Then the second part of the video, which will be much longer than the first part, is going to be going into the advanced concepts and the nuances of how to identify leading stocks within leading areas of the market. Now the analysis that you're going to see me go through and the thought process that I apply to say GDX versus GDXJ, you could be doing this for say SMH, which is the semiconductor ETF, versus the triple Qs, which is the proxy for the NASDAQ 100, to see, okay, is SMH, the semiconductor ETF, showing relative strength or relative weakness versus the triple Qs? If you think it's showing relative strength, then you could do the analysis that you're going to see me do for Newmont versus Wheaton Precious Metals or Alamos Gold versus Harmony Gold. So you could be looking at Nvidia versus AMD and going, okay, which one do you think is stronger from a relative strength perspective? And the importance here is relative strength is not your opinion, it's not my opinion, it's the opinion of the market. The market will guide you to what it thinks are the strongest stocks, to what it thinks are the best opportunities based on the concept of relative strength. So it's really about having less opinions and listening to the voice, listening to the verdict of the market. So let's just start off going through GDX, which is the gold miner ETF, versus GDXJ, which is the junior gold miner ETF. Now I'll point out a couple of nuances as we go through. So this is, I appreciate this video is going to be like drinking from a proverbial fire hose. There'll be a lot of information coming at you quite quickly, as there usually is in my videos. So I'd recommend you may want to watch this twice so some of the concepts, some of the nuances sink in. So let's begin with GDX versus GDXJ. So this is the main gold miner ETF versus the junior gold miner ETF. Now why may I want to start off with this analysis? Well, because I want to understand, okay, is the market in terms of the gold miners, is it currently preferring the large caps, which would be GDX? Am I seeing greater relative strength there? Or actually, am I seeing greater relative strength in the junior gold miners, which would indicate I may want to focus more so on the small and mid caps? Now, you could do this same analysis for, say, MDY, which is the mid cap ETF, or IWM versus the triple Qs or the SPY for the S&P 500. Okay, is the market currently preferring more so the larger mega caps or the smaller mid caps? And then you may want to focus based upon where you think the market is saying there is a greater degree of relative strength. So let's go through GDX. We'll start off with some pretty basic things. So if we just look at the 17th of July, so the high that I've marked here, so the 17th of July for both charts, okay, this is basically, there's a nice rally and then the stock tops there afterwards and undergoes a pullback. Now let's look at it compared to what happens with the high set on the 20th of August. So you see this high here and then this same high here for GDXJ. Which one makes a higher high and which one makes a higher low? Now why is that important? Because a higher high would indicate better strength relative to a higher low. So if we look at GDX, well, it's actually able to overcome the 17th of July high over here. So it's able to make a higher high. So a higher high is a sign of strength. Relative to GDXJ, what does it do? Well, it makes a lower high. It gets close, but it doesn't quite get there. So which one at the 20th of August is stronger? Well, it's GDX. It's making a higher high relative to GDXJ's lower high. So what is this already potentially indicating to us? Well, for me, it's indicating that actually the market right now prefers more so the large cap gold miners relative to the small and mid caps. Therefore, I want to be more focused on the larger caps. If we look in between those, you can see that we've got a low, which is on the 5th of August. So we could just mark that as well, okay? We don't want Visa. Let's go and mark this. Let's go Alt and then V like this, and let's go Alt V like this. So we've got the 5th of August. Which one? So the way I think about the pullbacks is when it pulls back, this could be an ETF, it could be a stock. Now we're looking at everything on a relative basis, which is very important. When it pulls back, we see the willingness or not of institutions to give up their positions. So which one has a greater pullback? And we can look at key moving averages for that as a useful reference point. Note how close GDXJ gets to its 200-day simple period moving average, being the red line on my chart, relative to GDX. I'm just going to kind of circle there. Which one is able to hold higher above its 200-day simple period moving average? It's GDX, right? So GDX shows better strength. So even though it's pulling back, it is showing strength relative to GDXJ. GDXJ is weaker on the pullback. It gets a lot closer to its 200-day simple period moving average. So on the pullback, we see that GDXJ is stronger, and then it's also able to make a higher high on the subsequent rally. So where is the strength right now? Is it in the junior gold miners or the larger gold miners? For me, it's GDX. We've seen greater strength on the pullback, and then we've seen it set a higher high. If we then look at this period in here, which is going to be around the middle of September, early to mid-September, isn't it? And if we look here for GDX, note how GDX is able to hold, there's a lot of G's, a lot of D's, and a lot of X's, aren't there? Note how GDX is able to hold around its 65-day EMA, which is the grey line there on my chart. Note how GDXJ undercuts its 65-day EMA, undercuts its 50-day SMA, and gets closer to its 200-day simple period moving average relative to GDX. So what is stronger again? GDX is stronger. If we then look on the final bar here, which is the 19th of September relative to the 17th of July 2024 high, note that GDX is just sitting above that high set there, whereas actually GDXJ has closed below that high sitting there. So again, what is stronger? It's GDX. So we can go through like this, and we're obviously doing this on an ETF basis, GDX versus GDXJ, but you can be doing this for SMH versus the triple Qs. You can be doing this on a stock by stock basis that we're going through as well. But this is useful to me to go, okay, where do I want to focus? Do I want to focus more so on the large caps or the small or mid caps? I'm going to be more favoring the large caps based on the strength of GDX relative to GDXJ. Now this can change. This is why this analysis is important on a day-to-day, a week-to-week basis. So now if we go into the large caps, okay, so Newmont and Wheaton Precious Metals are both in GDX. So the logical kind of flow here, imagine that we did the analysis of GDX versus the triple Qs or the S&P 500, and we go, okay, GDX is showing relative strength versus the major indexes. This is an area of the market I want to be focused on. For my type of setups, ideally, I want to see stocks that are basing constructively in nice uptrends, displaying relative strength to the market and to the group as well, potentially pulling back to key moving averages and or building constructive basing patterns, cup and handles, wedges, flags, Darvis boxes, channels, VCPs, so on and so forth, right? So now what we're doing is we're looking at NEM, Newmont versus WPM, Wheaton Precious Metal. And we're going to go through the same analysis and go through what do we think is stronger. So let's just do the same thing. Both of these are large caps, okay? And I'll talk about ADRs soon. I'll talk about ADRs soon too, and kind of and some fundamentals. We'll bring that in maybe at the end. So we've got the high here marked from Wednesday the 17th of July. Wednesday the 17th of July. Now let's just fast forward to the present day. So let's really jump ahead here, okay? If we were to fast forward to the present day up here, okay, Newmont has made a big higher high. So I'm just going to put higher high. Look how much higher it is relative to the high set on 17th of July 2024 relative to Wheaton Precious Metals. It's not even above it yet. See how from here to here it's basically flat, whereas Newmont, look at the rally that Newmont's been able to go through. Which one is stronger? Are you starting to get it? Newmont is way stronger. So again, which one are institutions more willing to buy? It's Newmont. Which one are they more so actively accumulating? It's Newmont. You're seeing it in the relative strength. This is how you identify leadership. It's how you identify relative strength. If we were to go for the intervening high on the 20th of August again, note how Newmont here, okay, from here to here is able to make a higher high. You see it? So again, on the 20th of August, which is stronger? It's Newmont, because Wheaton Precious Metals is not able to make a higher high. It makes a lower high. So which is stronger? It's Newmont. Which one do I want to be focused on? On Newmont. You can see here, if we go for this date, on September the 11th, Wheaton Precious Metals and Newmont are both forming shakeout demand tails. Wheaton Precious Metals is down around its 50-day simple period moving average, but where is Newmont? It's above its 50-day. It's around its 21-day. Note the distance, note the space. Newmont again is stronger on a pullback. So then you could look here and go, okay, well, Newmont has actually just bounced off its 10-day EMA. Wheaton Precious Metal pretty much bouncing off its 10-day EMA as well. So if you were looking at on isolation, just on like an individual candlestick, and you were like, wow, they're both sitting around their 10-day EMA, you've missed all of this context. Okay, you've missed the context of which one is more so the leader in terms of large caps. Now this can change very, very quickly, but you go off the information that you have available to you. So for me, Newmont is much stronger. If you look at the pullbacks as well between the 17th of July and the 20th of August, note how Newmont finds support around its 21 being the blue line, around the 21 being the blue line. Whereas you look at Wheaton, it's actually pulled back. It didn't hold its 21-day EMA. It didn't even hold its 50. It didn't even hold its 65-day EMA. Look how close it got to its 200-day. Whereas look at the distance of Newmont to its 200-day. Which stock is stronger? Which one is the market saying this is the leader? This is the one to focus on. And I want to focus on the strongest stocks in the market, ideally in the strongest groups. So now let's go and do the analysis again. And let's go for AGI relative to HMY, and then we'll circle back and do some of the more nuanced concepts. So now we're looking at two mid caps. So imagine we go, okay, actually we wanna focus on mid caps. Maybe we want a couple of large caps in the portfolio to focus on. Maybe we want some of the leading mid caps. Let's do the same analysis. So we've marked the high of the 17th of July 2024. If we were to fast forward to the present day, look where AGI is and look where HMY is. Is HMY above the high set on July 17th, 2024? No. Is AGI above the high? Yes, it's significantly above the high. In terms of percentages, it is around about, let me see if I can go get the percentage tool. There we go. It is around about 12% above the high, whereas HMY is circa 10% below the high. Which one is stronger? It's AGI doing that analysis. If we were to look at the intervening high for AGI on the 20th of August, note that it was up here. Did it make a higher high? It made a big higher high, right? So this is strong. This is signaling strength to us. Relative to HMY, HMY does make a higher high here, which is good. It's signaling strength. But which one makes a bigger higher high? Note the distance here for AGI, whereas note the distance here for HMY. Which one travels a greater distance? It's AGI. So we go tick for AGI relative to HMY. If we were to look at the pullback, okay, note that AGI is able to hold better around its 50-day moving average relative to HMY. It kind of slices through it there, slices through it more easily here. So I'd say it's a little bit more sloppy, a little bit weaker on the pullback. So I would again go tick for AGI. So we're seeing more strength, more strength, more strength. If we go and look at the pullback as well, something that I like to look for when a key high is set for both a stock and an ETF is note that AGI, after it puts in this higher high and it pulls back in here, it's able to hold that 17th of July high. This is again indicating strength, whereas HMY is just down here. It's around the lows of the base. So it's around the lows of the base when AGI is actually holding the prior highs of the base. Again, AGI is stronger. As AGI now pulls back again, it's pulling back into the highs of the base, a confluence of the 10-day EMA, maybe a little kind of cup and handle type pattern forming there, whereas HMI is just chopping around in the middle of the base. Which one is stronger? So now if I was to select two stocks that I want to focus on, and I was like, I want to go for a leading large cap and a leading mid cap, what are the two? Is it Wheaton Precious Metal and Harmony Gold? No, it's not those ones. It's Newmont and it's AGI. They're the ones that I want to focus on. Now, something else that you can bring into your analysis is trying to focus on stocks that are stronger than the group. So let me just delete all of these markings. Okay, and we're now going to bring in the ADR percentage as well. So we can delete all of these markings because now we want to think about the ADR percentage. Now, this is an important point that I think is overlooked. Now, in terms of the indicators, I get asked this a lot. Is that one there? Search ADR percentage. I use one by Arma Schluckler. I think I am pronouncing that correctly. So if you look here, this is the 20-day ADR percentage for Newmont. And this is the 20-day ADR percentage for GDX. Now what I may do is just change this here to Barrick Gold, as I think it may be it's going to be a little bit quicker. Let's go for Newmont. Okay, let's maybe go for SA. Let me see if I can tell you what, CDE potentially, really quick one, and we could do that relative to, I'm just gonna play around with these. Okay, and let's do this here and this here. We're going to add a little bit more into it, and let's actually go for this one here. I'm going to explain the concept. You can do this with Newmont as well, but I'm going to do the concept here for Hecla Mining, which is more so a silver mining stock relative to SIL, which is the silver miner ETF. So what we've got here is we've got the 20-day ADR percentage for SIL, which is 2.72%. So what does that mean? Well, 20-day ADR percentage means the 20-day average daily range percentage excluding gaps of the stock. So what is it? It's 2.72% for SIL, the silver miner ETF. Now, what is it for HL, Hecla Mining? Well, the 20-day average daily range percentage excluding gaps is 4.33%. So what is that telling us? Which one is quicker? Is the stock quicker or is the group quicker? quicker? Well, the stock is a lot quicker because it's got a 20-day ADR percentage of 4.33%. The average daily range, excluding gaps on the stock, is over 4%, whereas for SIL, it's 2.72%. So what does this mean? Well, the logic here is imagine if this was not 2.7%, imagine if the 20-day ADR percentage was 2%, and then if we go here with Hecla Mining, imagine it was 4%. So what does this imply? Well, it implies the stock is twice as quick as the group. So not only are we looking for the analysis that indicates we have a leading stock, as we did with Newmont versus Wheaton Precious Metals, or as we did with Alamos Gold versus HMY, we also want to bring in the context of 20-day ADR percentage. So not only do we want it to be stronger from a technical perspective, ideally the stock is quicker than the group ETF. Why? Because the logic here is if SIL goes up 10%, it's reasonable to expect actually the leading stock HL, just based on the 20-day ADR percentage, could go up twice as much because it's twice as quick. But then if you add in the leadership as well, oftentimes it is exponential in nature, not linear in nature. So not only do we want a stock that's showing very impressive relative strength, we also want a stock that is quicker than the relative ETF or potentially the major index, the Qs and the SPYs that you are looking at. That could be another check. Something else to factor in is obviously the fundamentals. You can look at the earnings, the sales, the estimates. Ideally, you want bigger earnings and sales coming up. I'll pop up on the screen now Newmont and its earnings, which you can see are triple digit year over year. The estimates coming through relative to Wheaton Precious Metal, which will be popping up on the screen now, and you can see that it is not as strong versus Newmont. So Newmont, the market is favoring the earnings and the sales, and oftentimes stocks will move on the expectations of future earnings. That's a very important concept. The market and stocks will often move on expectations of future earnings. So the market wants to see things getting better. Are things going to continually improve? You can also think about 50-day average dollar volume. Think about the liquidity of the stock too. So I'll wrap it up there, guys. Hopefully they are some useful things that you can be doing, some useful analysis that you can be doing. So again, you could compare, say, SMH versus the likes of the triple Qs. You could look at, say, let's just do one here. You could look at, say, TAN relative to the S&P 500. So this would indicate, do you want to be anywhere near solar stocks right now relative to the S&P 500? No, the S&P 500 is at all-time high territory, okay, like this, whereas TAN is just absolutely nowhere, phase 4 decline. This is not where leadership is. You want to be focusing, I think, on the leading areas of the market and then try and dial in and pinpoint what are the 1, 2, 3 leading stocks within those leading areas. As Livermore said, focus on the leaders. So thank you very much for watching. Hopefully you enjoyed that video. Hopefully it helps you with your trading, and I will see you in a future video.